Welcome to Capital and Concrete. In the world of institutional real estate, one metric stands above all others as a primary indicator of value. That metric is the capitalization rate, or cap rate. It is the universal language spoken by investors, lenders, and analysts across the global market. To the uninitiated, it is just a percentage. But to the professional, it represents a complex interplay of risk, reward, and market sentiment. At its core, the cap rate is a calculation used to estimate an investor's potential return on a commercial real estate investment. The formula is elegantly simple: net operating income, or NOI, divided by the current market value or purchase price of the property. Think of it as the yield the property would produce in a single year, assuming the asset was purchased entirely with cash, without debt. Let's break down the components. First, the net operating income, the actual heart of the asset's financial performance after all operating expenses are deducted. Then, the property value. This is influenced by physical condition, local market demand, lease terms, and the broader macroeconomic environment. But a common misconception among retail investors is that a higher cap rate always signifies a superior or more profitable investment opportunity. In reality, the cap rate is a direct reflection of risk. A high cap rate often indicates a higher risk profile or potential instability. This could stem from shorter lease terms, specialized building uses, or properties located in secondary markets with lower economic growth. Conversely, a low cap rate typically points to a trophy asset, a modern office tower in a primary gateway city with stable, credit-worthy tenants. Comparing different assets requires deep nuance. An industrial hub may trade at a very different rate than a downtown retail center. Market volatility also plays a significant role. Fluctuating interest rates can cause cap rates to compress or expand across entire market sectors. Therefore, the cap rate is only a starting point. The real question is, why is the cap rate at that specific level for this asset? Successful investors look beyond the number to understand the underlying fundamentals, the physical concrete, the tenant contracts, and the capital structure. As we navigate shifting global markets, mastering this calculation is essential for identifying true value in an increasingly competitive landscape. Thank you for joining us. Capital and Concrete is dedicated to moving beyond brick and mortar to provide clarity in high-stakes investing. Subscribe for more institutional-grade insights into the world of commercial real estate and sophisticated financial strategies.